It is time to talk a little economy. Our man, Zach Abraham, Chief Investment Officer, Bulwark Capital, joins the program. This week, little shock through the system, kick to the grundle. DeepSeek, which apparently lies most of the time, even though it functions. But, man, Nvidia, they just had to hold on their shorts. What, they lose $600 billion in today?
Yeah, and they didn't lose enough. We're at a really weird stage right now. What I think it's too early to be definitive about the whole DeepSeek thing, but this is exactly what we were afraid of, and one of the reasons why at these levels we just said, yeah, let's see. It was probably about 30-40% ago in Nvidia where we just said no more. This is too nuts, and the reason why. And it's not Nvidia's fault, right? It's the reason we were like, no mas, is because they did so well that this market just way, in our opinion, overcooked it. And look, they're going to make tons of money. They're going to sell tons of chips. That's not the issue. The issue is they're priced as if they're going to sell, their revenue growth is going to stay on this trajectory and they're going to maintain 65 to 70% margins. That isn't going to happen. And it isn't going to happen because when the cost differential between your biggest and best chip and the next greatest chip is $40,000, free markets and capitalism are an incredible thing. People are going to figure out how to arbitrage that separation. And I honestly think it's a bit of a mistake that Nvidia is making. And I could be wrong. And this is a marginal mistake because they're killing it financially. It's not their problem that people are paying irrational prices for their stocks. But I think they'd be better off cutting that price a little bit and reducing their margins to preserve that competition, right? Because they're just giving too much of an opportunity to somebody else. And that's exactly what that DeepSeek hit at, right? And there's legs to that DeepSeek story from what we see and what we've heard and what we've talked about. And the basis line of it, from what we understand from now, Chad, is that in the early innings, when you're building the foundation of that LLM, that bigger compute power that those, that upper echelon NVIDIA chips, there's a lot of efficacy. But once you have that, right, once you've got that foundation built, which effectively everybody that's building LLMs at this moment does, right? They're just piggybacking off of ChatGPT and all that. So once you can do that, what they're finding out is that if you don't have to build the foundation, you can train these things up really well with way less of those high-power GPUs than they previously thought. Yeah. So look, this story is going to evolve and move and ebb. But I look, I'm not offering. This is not a recommendation of any kind. We really think that the top is in Nvidia for quite some time. And I think people need to sober up about this stock market. It's really starting to freak us out. Okay, Tesla announced a quarter yesterday. That was a disaster. Their quarter was a disaster. Every financial metric they announced, including margins, revenues, vehicles delivered, when you roll into a quarter and you make automobiles and you're trading at 110 times earnings and you miss every freaking financial metric, that stock should have gotten annihilated. It didn't today. But watch Tesla over the next 1 to 3 days. And guys, if you're sitting on a pile of that stock, you own vapor at these levels. And I'm not taking shots at Musk. Again, Musk, he did a pretty fantastic pump yesterday. I mean, he wasn't addressing anything in the queue. He was saying 2026 is going to be quote unquote epic. And 2027 is going to be out of this world. And you're looking at him going, Elon, you're declining in revenues and margins. If there's a demand spike right around the corner, why are your margins still dropping? Then Apple just announced today the stock's up 3.5% after hours. Ridiculous. They missed on iPhone sales. They missed by $2 billion on iPhone sales, right? Which, remember, this is the iPhone 16 AI, the new one, right? This was the whole impetus for the run-up, right? The multiple on Apple went from 22 to 40. We're now trading at 43 times earnings. They're growing at 4% a year, Chad. And they're guiding soft for low single digits growth going forward. They lost 11%. Sales of iPhones in China are down another 11%. So they are losing market share. Their margin is slipping. Their revenue growth has almost fallen to zero, and their multiple keeps expanding. They're trading at 43 times, and they're not growing.
God, that's insane. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. How's the market feel about Trump? Because, again, he does what he does, and he can be a bit, at times chaotic, as we all know, and sometimes he shoots from the hip, and, we'll figure it out later. But is it feeling comfortable, stable? Does it feel like that there's just, because we know the market likes stability?
So if you look at the broader market, and you have to really separate the market from the market, right? Meaning the market that everybody's talking about on CNBC and Twitter and everybody's playing in, that looks shaky as all hell. It looks scary. It looks like a roach motel. They're all buying the wrong stuff. They're bidding up multiples while earnings and revenues are it's nuts. I've never seen stocks go up while their earnings and revenues are going down. This cannot continue. That stuff, I think, I think a lot of that high flying stuff is about ready to get wrecked again in a similar fashion to 2022. The rest of the broader market, I'll stick to my knitting. I think, if you look at the movements in the metals, gold, all that kind of stuff, all those things are still ridiculously cheap. Another update for gold. We were talking about this. We were talking about this a year ago, remember? So over the last year, we just hit another all-time high in gold, 2850. Now, last year, gold miners outperformed the S&P 500, okay? And they are cheaper today than they were a year ago.
That's insane.
Yeah, so their multiples are lower. They're like price of gold. They're trading right now at a discount to where they were just a month and a half ago, the last time the market was at 2,800, and we're at 2,850 gold now. So that stuff all looks great. That's the problem is I think everybody's taking the wrong cue. They're going, oh, Trump's in, the market's going to do great. And I'm like, guys, I think you're looking at the wrong side of it. Yeah. Right? And Chad, we're not prognosticating this. Microsoft announced yesterday. Not a bad cue. Microsoft's isn't nearly as overpriced as Apple or some of these other things, but their revenue growth rate is dropping again. They were at 16% last year. This last Q, they're down to 12. Their stock got shelled. Their revenue growth rate is down to 12%. Their stock was down 6.5% today. Apple undershoots on iPhone sales on what was supposed to be the biggest refresh cycle ever, right? The AI phone, oh, here we go. Sales in China down 11%. They're losing market share, and iPhone sales missed by 2%, and the stock's up 3.5% in after hours.
That's crazy.
It's nuts. I've never the Tesla one yesterday was so wild that I saw something I've never seen before in my career. JP Morgan's analyst desk put out a note and they said, we have no idea why the stock is up in after hours, other than the fact that the CEO said the company might be bigger than all 5 of the biggest companies in the world combined. But they're like, other than that, we don't have a clue. Like, I've never heard an analyst desk come out and say, they're always trying to come up with why it's up, right? Yeah. They're always trying to play that game. They were looking at the same numbers we were, and they were going, yeah, we don't have an answer to this.
I got nothing for you guys. That's it.
Yeah, declining earnings, declining revenues on high multiple growth stocks equal higher multiples and higher share prices in this market. And look, I don't think that's going to last very long. No. I think you have all of the idiots hitting the buy button right now. And if I were your listeners, people need to be very – and here's the problem. I think the biggest risk stocks right now are the ones that everybody owns the most of, right? Tesla, Apple, Nvidia. I could be wrong. And if I am, I'll issue an apology and I'll acknowledge it. I think those things are about to get rocked.
I think so too. Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out. They want to get that second opinion just in case things go the other way. As we know, risk management, number one thing.
BulwarkCapitalManagement.com is the easiest place to find us. KnowYourRiskRadio.com, easiest place to find us. And we've got our webinar happening this week, so it's too late for your listeners, but we're doing those webinars every month now, month and a half. And so you can go on our website, BulwarkCapitalManagement.com, sign up for it. And yeah, it's not too hard to find.
Rock and roll, brother. You have a good weekend. We'll do it again next week.
All right, Chad. Thanks a lot, man.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.